Hello and welcome to Blythe Business News. For this edition, I'm joined by Mark Learmonth, who is the Chief Executive of Caledonia Mining. Caledonia listed on the New York Stock Exchange, the AIM market in London, and also the Victoria Falls Exchange. On all three exchanges, the symbol of CMCL. For new viewers, Caledonia operates the Blanket Mine in Zimbabwe, where it produces gold. In fact, it's just announced a record quarter's production, some 20,000 ounces of gold out of the Blanket Mine in the last quarter. However, we're not talking about the Blanket Mine today. We're talking about something new. Mark, Caledonia is now, it seems, well on its way to becoming a multi-asset producer. You're announcing the proposed purchase of the Bilbos gold project in Zimbabwe. Tell us a bit about it. Tell us about the reasoning behind the acquisition.
Yeah, well, Tim, thank you. We've been looking at this project since 2016, and it's been through various iterations. So it's something that's been on our radar screen for a long time. But to put it bluntly, it's a large, high-grade, open pittable deposit, about 2.5 million ounces contained at a grade of 2.2, 2.3 grams a ton. So great grade for an open pit mine. And we think it's certainly one of easily the best project in Zimbabwe, and probably one of the better projects in Africa. So it's entirely consistent and compatible with the strategy that we developed last year, which is to become a multi-asset mid-tier producer focused on Zimbabwe, targeting a production rate in sort of 7 years or so of 300,000-400,000 ounces a year. And this is the second step in that direction. Clearly, Blanket's at 80,000. We've got Marley Green in the background where we're doing work, and this is another very substantial step towards achieving that objective.
Okay, let's just look briefly at how you're going to pay for it. I understand you're going to be paying something like approximately 5 million Caledonia shares and a 1% net smelter royalty on the project revenues, but just talk us in simple terms through the key terms of the transaction.
Yeah, so the asset is about 50% held by an individual called Victor Gapari, who is a prominent Zimbabwean mining entrepreneur, and for maybe 2 years, maybe 3, he was the president of the Chamber of Mines Zimbabwe, so he's a well-known, well-respected mining figure. He'll end up with about 17% of Caledonia's fully diluted equity and will join the Caledonia board, where I'm confident he'll make a great contribution, particularly in terms of improving our connectivity with government, which is going to become increasingly important. Okay, there's a Chinese investor group who they've got about 25% of the asset. And they will also become a substantial shareholder in Caledonia. And then Baker Steel is the third shareholder. They're taking half of their consideration as shares and half of their consideration as the net smelter royalty. So that's how we're buying the asset. Then in terms of affordability, there is a feasibility study, a bankable feasibility study that's been prepared by the existing vendors, and that caters for a capex of about $250 million to build a mine producing 168,000 ounces a year. And we can. First thing we'll do is we'll do our own feasibility study when the transaction completes. But we're not beholden to doing the thing in a single big bound. It could be if capital markets aren't conducive. Look, our sources of funding will be 3 sources. First is internal cash flow. So we're having cash flow coming out of Blanket Mine. A little element of this transaction is that we will pretty much immediately start work on an oxide pre-strip, which is effectively fast-tracking a component of the bigger transaction, which is focused on sulfides, but with a view to getting early access to oxide material. And that should be cash generative within about 3 months of starting work. And we would become net cash positive after about 5 months on that project. And that again would give us incremental cash flows over 3 years, the 3 years of that sort of initial sort of pre-project life. So cash flows from Blanket, cash flows from the oxide pre-strip, In addition, one of the key conditions to this transaction is that we'll be able to export our gold, which then means it's bankable. And clearly, for an asset of this quality, we don't envisage any difficulty raising some debt for this project. And the third component would be equity. And clearly, at our current share price, our share price has come under pressure along with other gold producers. You know, it's less comfortable issuing equity at this share price than it would have been at a higher share price. So if we are in a position where funding just doesn't work for us, we will fall back onto an alternative commercialization approach, which would be a two-phased approach, whereby phase one would be largely internally funded and would see us build an initial phase of say 70,000 ounces, and then get the cash coming from that, and then reinvest that cash into a second phase with a view to getting up to the eventual target of 170,000 ounces a year. So by no means are we betting the farm, so to speak, on effectively a $250 million project. We have a lot of flexibility in terms of how we fund this.
Okay, so we're clear on one thing. You said that there's an existing feasibility study. You already also announced you're going to be doing your own feasibility study. And I get that you're going to have a fast track, some early revenue from Bilbos. But what's the time scale to proper profitable operation at Bilbos?
Okay, well, we don't know until we've done the feasibility study, Tim. But in my mind, we got to wait for the transaction to complete. Let's say that gets done by the end of the year. Say we do our own feasibility study in the course of 2023, such that we're then able to raise funds and start construction in 2024. Say a 2-year build, 2024, 2025. And then so we'd aim perhaps start production early 2026, and then profitability, well, profitability would come thereafter. I wouldn't like to be prescriptive at this stage as to whether it would be a week on Wednesday in the third month of 2026 or sometime later than that. I think that's a little bit too early.
No hostages to fortune, but thank you for just giving us a broad sense of the time scale. But just to conclude, Mark, once Bilbos is in production, I mean, it's got the potential, I think, to something like quadruple Caledonia's current gold production. So it's a significant step change. So you'll have Blanket doing 80,000 ounces. You'll have Bilbos producing a significant number of ounces. You've then got Mali Green. Now, with those three projects all moving forward very nicely, what does that mean for you as the chief exec of Caledonia? How does it position the company strategically?
Well, it positions us as we've had two over the past year, investors have consistently raised two concerns when they're reviewing Caledonia as an investment opportunity. The first, by far the most important, is the fact that we don't export our gold and we don't therefore control our revenues. The condition precedent to this transaction is that we do export our gold and we will control our revenues, and that cuts straight through the only really significant sort of obstacle to Zimbabwe becoming a completely regular investment destination. And so I think that's a really important step forwards. The other issue that people consistently raise is that we're just too small. At 80,000 ounces, we're below that sort of magic 100,000 ounce a year threshold, and clearly that will blast us straight through that. So I think it means that it really puts us on the map in terms of being a substantial and investable gold producer.
Big steps forward. Mark, thanks for joining us today. That was Mark Learmonth, Chief Executive of Caledonia Mining. As I said at the start of the interview, Caledonia listed on 3 exchanges: New York, AIM in London, and the Victoria Falls Stock Exchange. That's it from this edition of the Blythe Ray Business News. Thanks for watching.